If a real estate agent told you VA loans are harder to close, weaker offers, and more trouble than they're worth, they were wrong. And today we're going to prove it, one myth at a time. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. You are listening to Ron Siegel Radio, and whether you're a veteran, active duty service member, or someone who loves one, this show is for you today. I've been doing this since 1983, and in all that time, few things frustrate me more than watching a veteran get steered away from the best loan product available to them because somebody in the transaction didn't know what they were talking about. Today, let's fix that. Let's talk about the VA home loan because after more than 4 decades in this business, I still hear the same myths being passed around like they are facts. And those myths are costing veterans the homes they earned the right to buy. Myth number 1. VA buyers don't have skin in the game because they put zero down. This one I hate the most of all. Here's what the data actually shows. The average VA buyer in 2024 had a higher credit score and more money in the bank than the average FHA buyer. Not a little higher, meaningfully higher. And yet veterans are being steered away from using a benefit they literally served to earn. Yes, they've got more skin in the game because they put their life on the line. They served all of us so we could do what we do because of what their efforts and what they were willing to do. Think about that for a moment. A veteran who spent years in uniform, who put their life on hold, in many cases put their life on the line, comes home, wants to buy a house, and gets told their loan is weak. That's not a VA problem. That's an education problem. Myth number 2, VA loans take forever to close. When you're working with a lender who actually knows the product, VA loans close in the same time frame as conventional loans, sometimes faster. The appraisal process can add time in some markets, but a competent lender accounts for that up front and manages the timeline accordingly. This myth exists because of lenders who don't know the process, not because of anything built into the loan itself. Myth number 3, the seller always gets stuck paying the veteran's fees. This one has some nuance to it, so let me break it down simply. The VA does have non-allowable fees, the cost the veteran cannot pay, but only when a lender's origination charges exceed 1% of the loan amount. When you work with a lender who structures the transaction correctly, this is a non-issue. The problem isn't the VA loan. The problem is the lender who doesn't know what they're doing and ends up making the veteran's offer look weaker than it actually is. Myth number 4, VA appraisals kill deals. The VA appraisal process actually has some built-in protections that other loan types don't have. There's a process called Tidewater that gives everyone a chance to provide additional information before a low value is assigned. And if you still disagree with the appraisal, there's a formal reconsideration of value process. In fact, the conventional lending world is currently studying how to adopt a similar model. So the loan type that supposedly has the worst appraisal process is the one everyone else is trying to copy. Let that sink in. Now, here's something I want every veteran listening to understand. There is a real difference between a lender who accidentally closes 2 VA loans a year and one who has studied, trained, and made VA lending their focus. That difference shows up when your offer gets accepted. It shows up when another lender tells your veteran they don't qualify, and the right lender finds out they actually do. Here's something else worth knowing. 87% of VA loan usage nationwide comes from veterans, not active duty service members. So even if you live nowhere near a military base, there are veterans in your community who have earned this benefit and may not know how to use it. They may not know they could be exempt from the VA funding fee because of a disability rating. They may not know about property tax exemptions in their state that could save them thousands of dollars every single year. They may not realize that being eligible for a VA loan and actually qualifying for one are 2 completely different conversations, and that understanding the difference is exactly where the right advisor earns their place at the table. And here's one more thing worth mentioning. If you're a surviving spouse of a veteran who passed away as a result of their service, you may have your own VA home loan benefit. It's one of the most underused and least talked about benefits in the entire program. If that describes your situation, please reach out. That conversation alone could change everything for you. So, what's your next step? If you're a veteran, an active duty service member, or a surviving spouse, and you want to understand what you've actually earned, go to rsrlinks.com/VA loan. That's rsrlinks.com/VA loan. And if you want to get your overall financial house in order before you buy, whether you're a veteran or not, start at rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. Don't let a myth stand between you and a benefit you've earned. Strategy beats rate always. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to Mortgage 101, brought to you by rsrloans.com/VA loan, rsrlinks.com/VA loan.